Are we witnessing a new dawn in value investing where funds that have more of a value bias are starting to get superior performance compared to their growth counterparts that are maybe overloaded with tech stocks and yesterday's news stories? It could be an interesting time for investing. So here's some data from the AJ Bell website. It's global funds. I've ranked them on the 5-year return, but I'm also taking a bit of a look at the 10-year return as well. At the top, we've got global energy, but the 10-year return is negative. So the second one is Ranmore Global Equity, which I've covered in another video, and I'll put a link to that in the description. Below that, we've got Royal London Global Equity Select, which I used to hold, used to really like. The fund management team left, and then also I think its style has become slightly out of favour, and the 1-year growth is only about 4%. Then we've got another value fund to go alongside Ranmore, which is the MSF Meridian. We've also got this MI Thornbridge Global Opportunities. I'll have a look at that one in a minute. We've got industrials. We've got Quilter Investors Global Unconstrained, which is just another take on the Royal London Fund. So I'm going to ignore that one. We've got an Invesco fund there, Global X UK, and 91 Global Special Situations, which again is more of a value play than a growth play. So all of this is suggesting that value is starting to get some pretty decent returns over a 5-year period, and it might be an interesting time to look a bit more in depth at value investing. Now, I do prefer global funds because they can pivot across different countries, and the problem with America is that there isn't always that much value to be found there, as there's so much money piling onto the US stock market. Go to the AJ Bell website, select the fund screener. I made a selection of funds and then global. I've sorted on 5 years, and then I select MI Thornbridge, the one I want to research a bit more, and then I select the Morningstar Analyst Report. So it's a detailed report, 25 pages. It's got a star rating of 5 stars, which means the performance has been very good. The overall medal rating is neutral, and we'll come to that in a minute. The total assets are less than 200 million, so that's quite low for a fund that's been around for 15 years. So it's looking at things on these 3 pillars. The process it uses to select companies that go in the fund, and it really likes that. The people behind the fund, and doesn't really like that at all. And then it's also looking at the parent company, which I think is probably less important, and rates that as average. Top 10 holdings are here, some fairly familiar names here. There's not maybe much that's actually that special about the current holdings of this fund. It's got 49 holdings, so it's quite a concentrated fund, and that's what will partly help to drive superior either outperformance or underperformance. But what interested me the most about the MI Thornbridge Global Opportunities Fund is that the manager has been Rob Alderman from December 2022. But before that, it was our good friend Sean Pesh, or as I call him, Terry Pesh, and he currently runs the Ranmore Global Equity Fund. So his company, Ranmore, probably the managers behind this fund between 2019 and 2022. And that's what's partly contributed to the good performance of this fund. So we can't necessarily attribute what we're seeing in the numbers to the current fund manager. And it's kind of that reason that's making me think I'm going to pass on this fund for now, because I think there's some other exciting opportunities. Now let's look at MFS Meridian Contrarian Value. Now this is a fund that normally I'd run a mile from, because I really don't like contrarian investors. I think they can be generally just complete idiots. But let's see what Morningstar has to make of it. So it's got a silver medal rating, 5 stars for performance. Historically, it did have a gold medal, but it does rate all of its pillars as above average, and the parents coming in at high. And it seems that it likes the strategy, and it also likes the execution. And we've got 1.1 billion of funds under management. So that's more like it for a proper fund that a lot of seasoned investors have bought into. So it says the managers are willing to go against the crowd and look beyond temporary problems that a company might have, And to make that work, they require stocks to have a margin of safety, an attractive risk reward profile with limited downside, and a durable business model. So, kind of quality companies that have maybe come a bit unstuck, but the business model is still sound. The fund benchmarks itself against the World Value Index and not the overall World Index, which is interesting. In terms of comparisons to that index, it is overweight in industrials and underweight in financial services, which is maybe interesting if you don't like banks, for example. It's got a dividend yield on the portfolio of 4%, although I think it's an accumulating fund. It's got 55 holdings, 35% in the top 10. Number one holding, Ryanair, rather you than me, but there you go. It's also got National Grid in there, which I wouldn't necessarily say it's in with what they've previously been saying about types of companies they invest in. Some companies you haven't heard of, got a bit of cash as well. Quite a limited exposure to North America at present, and overweight UK, which you'd kind of expect if it is based in the UK. Only slightly overweight Japan, which is probably quite good because I'm not so convinced on there being a lot of opportunities in Japan, and potentially it's quite difficult for someone in the UK to pick the best Japanese companies. These are 0.85%, which is, I suppose, reasonable. And it's quite interesting that Morningstar say that we think this share class will be able to deliver positive alpha relative to the category benchmark index. So now let's see what Morningstar think of Ranmore Global Equity. Well, unfortunately, they only give it a neutral rating, and it seems like they're not so keen on the people pillar. And this is because the portfolio management team just has one person in it, being Mr. Pesh. So, as I highlighted in my earlier video on this fund, it is a bit of a owner managed fund, and so you do have a little bit of a cult of personality there, and there's maybe some risk around potentially governance and potentially who is keeping Mr. Pesh in check. And then in terms of the portfolio, covered this before, but it's got high yield, low exposure to US. It's got 63 holdings, which is pretty good, pretty diversified, only 26% in the top 10. So it's not an overly concentrated portfolio. Sector exposure is quite high in consumer, cyclical, and also quite high exposure to Japan. So if you want a fund with more of a management team behind it, then maybe MFS Meridian Contrarian is better for you. If you think that a star fund manager with a lot of skin in the game can truly outperform, then Mr. Pesh at Ranmore might be the better bet. As we scroll down the list a bit more, we come across other value plays, things like Schroeder Global Recovery. We've got our favourite, the L&G Global 100, although that's clearly not a value play. We've got things like the UBS RAFI developed 1000 index, that's a tracker, but it has a different weighting to market capitalization, gives it a bit of a value edge. We've got M&G Global Strategic Value. So what do you think? Have we seen enough of a paradigm shift in terms of Trump and some of his policies that maybe value is going to do well over the shorter to medium term? Let me know in the comments what your thoughts are. And you can check out this next video, or you can look at the portfolio coaching service on my website.